Hey everybody, this is Jose Blasco. We are about to start. Please, a quick sound check, as we always do before we start. A quick hello message on the chat box would do. That would tell me that you hear me well, and we are ready to get started. I believe all is good as always, but it's always good to have this extra confirmation. So please go ahead and say something nice in the chat box, like a quick hello, for example, and that way I know we are all well connected. In the meantime, I will turn on the video stream and I'll put myself here in the bottom right corner of the screen as every day. So that way, you have full visibility on the screen, and at the same time, we are a bit more connected in the online world. Okay, so we are live now. Thank you so much, Christian, for that. Mark, how are you, my friend? Today you are Mark. I can see that. Good to see. Anyway, welcome everybody. It's April 29, 2029, options with options. So we met yesterday. We were trading options. Today we're going to do the same. Yesterday we spent lots of time with managements and tweaks, powerful stuff, but we didn't have too many opportunities to put together new trades. So hopefully today is going to be a little bit of the reverse. We'll spend less time talking about current trades and we'll spend more time with new trades. Before we get started, I want to highlight the disclaimer on the upper left side of the screen. Please read it carefully. This is important information. Do not skip it. Read it all, every single word, please. It is indeed important stuff. Here we go. Agenda. We just said hello. We are simulcasting, meaning that depending on where you are in the world and if you're using YouTube, Facebook, or it could be our private stream on our website, tradewithufos.com/live. Depending on where you are, as I was saying, you may have different video lags given the nature of how video distribution networks work. So keep that in mind, especially when it comes to interacting with the chat box and everything, to be well connected on time and be on top of those chat boxes. How are you, Gary? It's good to see you. So the other important aspect of simulcasting is that some of the content of this session is being broadcasted in public places such as YouTube, Facebook, but that's a partial amount of the content. The full duration session is in our private room, tradewithufos.com/live, meaning the streams that we do in YouTube, Facebook, and so on are of a limited duration. The content is the same, it's just less quantity of it. So what we are trying to do here is, for the ones of you looking at trading as something a bit less important, or I mean still important, but a bit more, let's call it part-time, as I normally say. So you would want to use the YouTube, the Facebook channels, because those are free, and you will be participating of the same session. Now, more or less after 30 minutes or so, then that would be discontinued. That's why I'm talking about part-time. If you are one of those traders, that you are all about it, you are super passionate, you always want more, and you are like me in that sense, so then I would recommend you to look at the coaching plans on our website, to subscribe to one of the coaching plans, so then you have access to the private room, and then you benefit from the full duration session, which again, the content is the same, it's just the duration, and therefore the amount of practice, the amount of trades, etc. So depending on who you are as a trader, you will decide what's best for you, the public free environments or the paid coaching plan membership that gives you access to a little more. Okay. How are you, Joanne? How are you, Ahmed? It's very good to see. Yes, and today you're here on time. Yes, perfect. So let's begin. We're going to look at the market, review the trades, okay, and from there look at new opportunities. Okay, so let's close this PowerPoint document. I meant to close it, and let's begin with our analysis of the markets. Okay, so what do we have? Well, the market is moving up. At this moment in time, the market is up by 0.22%. Okay, the market up and gapping up. Actually, there was a little bit of a breakout of this. I was mentioning this congestion area on the chart of the S&P in the 55-minute time frame. Price broke out of it and now is coming back in. Many people are probably expecting this area to be an area that turns the price and pushes the price back up, and this could certainly be the case. But from a technical point of view, we don't have any UFO out there. The UFOs are much below, so we may see the S&P move down, or maybe what's going to happen is that maybe an hour or two from now, we'll have a new UFO form at this level. But at this moment in time, it's just speculation. It's not there yet. Okay, so we cannot call it a UFO because it's not. So definitely, it seems that the climate is propagating 4 out of 9 in the climate. Definitely, it seems that there is an intention of breakout to the upside. And that's why yesterday we were looking at finding stocks to be a buyer of those stocks, so we can benefit from that potential breakout if that breakout was going to not only happen but continue. So at this moment in time, we'll see. You can see there's been a little bit of fear kicking in. Okay, the VIX went from 17 to almost 18, hit the red UFO, started going down. Not a surprise, just like the move to the upside started for the green UFO. All of this is not a surprise, but even it doesn't matter really if you're talking about the upper UFO or the bottom UFO. We are talking about a range between 18 to 16. So levels of premium are, let's call it limited. It's not like there is plenty of premium. I mean, if you think about it in terms of a few years ago, it's plenty because the VIX was trading at 12. So 17 is better than before. But at the same time, because there is more volatility in the market and price movement, I'm talking about historical volatility, meaning volatility of price movement, not implied volatility in the options prices. So what happens is that the distance between UFOs is wider. So really, it's been difficult in recent times to find setups where we sell options. Okay, that's been tough. We have not accomplished many of those setups in the recent times. Today in the scanner, okay, you can see I had the scanner set up looking at the bottom, and given the fact that the VIX went up, okay, which was not the case when I look at it earlier in the day. So I'm gonna rescan, okay, looking for top, okay, which is gonna be looking for options to be sold for non-directional purposes. So I'll come back to this in a minute. So now that we know about the S&P and the VIX, we need to review what happens to COP as well as Ali, which is the trade that we were planning yesterday, which I believe didn't meet the fill, because if it did, I would have it here on Thinkorswim, and I don't. On Thinkorswim, I have COP. That's the one I have, but I don't have the other one. So in this sense, it seems that nothing's different. But we'll see that in a minute. Okay, so what do we have when it comes to COP? Well, to be honest, there is not much to be added. I'm going to bring Option Station Pro so we can look at the real-time P&L of this trade. But remember, as long as we stay between, I think it was 50, 51 to 56 or so, so then this trade will profit by $43, if I remember well from yesterday. That's what the profit will be. This trade cannot lose anymore, so that's good. But what we want to see now is we want to see COP either go crazy up or go crazy down. Earnings happening next week on May 4 may certainly help for this to happen. And that would be fantastic, because then this trade will provide a better profit. At this moment in time, looking at the P&L of the trade with COP, at this moment in time, the accumulated P&L for this trade is $70.5. Again, if price stays in between that range between 50 to 56, we're going to make 43 on expiration after earnings. But again, if price was to move significantly either higher or lower, then you can make much more, either if it goes higher or lower. So that's where we're at, and there is not much to be discussed because we have already orders to close the options we sold yesterday at 5 cents. Okay, we have orders to close at 5 cents. But notice that the options that we sold are still trading at 23 cents or 41 cents, meaning that we don't have an opportunity to close them for 5 cents yet. And because we cannot close them, so then there is nothing to be done. And therefore, that's my comments for COP. And unless you have a question, I'm going to check the chat box now. But unless you have a question, really, I'm going to move into planning new trades, because that's what it is. Okay. Mark, didn't get filled on closing the order until just after the open this morning. Oh, got it. Very good. So then did you turn around immediately, Mark, and you sold the 49 put and the 57 call? Did you do that? If you didn't, you should. Okay, and actually you will get a little bit of a better pricing that we got yesterday, to be honest. That will be to your advantage this time. Not always like that. Sometimes, you don't get filled today and you feel it's a bad thing, and next thing you know, you get better prices next day. sometimes it's the opposite. You never know. But in your case, it should be better, because selling the 49.57 strangle, which should pay you a bit more than what we got yesterday. Okay, so if you do that, Mark, and you want to report later on the chat box how much you got for that strangle, I'd like to know. We got 63 yesterday. I would really like to know how much you got today. You got 63 as well. Okay, so then good one. We are in a very equal position. And now let's go with the flow, Mark. You cannot lose money on this trade any longer, no matter what. Okay, and that's the beauty of options. Risk is limited, and in this case, the risk is no risk, is profit. Worst case, you make 43. Okay, so yeah, so that's what we have. So anyway, with all of this said, it's time to go back to the charts, looking for trading opportunities. We are about to conclude the scan. Oh, by the way, I forgot to check Ali or Alai. Not sure how is the right way to pronounce it, to be honest. Ali would be one, Alai would be two. If you guys want to, I teach you trading, you teach me English. If that's a good trade for us to have, please get my order filled. You guys tell me if I should say Ali, this is one, or I should say Alai, this is two. Okay, so Ali number one, Alai number two. You guys tell me how should I pronounce that stock. Yeah, and it did not fill, correct. We had an order to purchase that stock using the second UFO, I believe. No, actually it was the UFO here, and notice that a third UFO took place. So we're gonna reanalyze the whole thing, not an issue. By the way, out of curiosity, you probably remember that I said that would be number two, Joe, Leland, number two. So then it would be Alai, right? That's what I said. So Ali number one, Alai number two. Okay, so Alai, here we go. That's a very positive name for a stock. I'm just realizing that that's a very, very positive name for a stock. It's a way to bias people into being a buyer only. Anyway, so yesterday someone asked me, should I use a good till cancel order or day only for that stock? And I say day only. And the reason why I said day only is because tomorrow the value of the EMA will be different, and therefore our reference point for the entry may be that UFO instead of the bottom UFO, which is the one we were using. And sure enough, that's what we got. Currently 49.45, it's actually in the middle of that UFO, which is a different UFO than the one we were pointing at yesterday. Okay, so that's why we use the orders. So if we don't get filled in the day, the next day our job is to go ahead and to revisit and replan the trade all the way from the very beginning. So I'm going to delete from to be reviewed, and I'm just going to go for the routine of looking for trading opportunities. And if any, we'll go back to directional trades later on. And if ally is in the list, then we'll make it our ally. So now, if I remember well from yesterday, many of the stocks in this list were actually about to report earnings. So Twilio is reporting earnings on May 5. That would not allow me for me to do an iron condor. I'm doing non-directional credit now, so looking for iron condors. It will not allow me to do it because May 5 is right here, where the next expiration date is May 7. And again, April 30, you can always check, but probably it's not going to work well with most of the stocks. Twilio is a $300 over stock. You could certainly try, but also notice that we got 45%, which is less than 48. So then we're going to pass, okay? So I'm going to go for the next one, which is Roku. And Roku is reporting earnings on the 6th, so we cannot do that. Wayfair reporting earnings on the 6th. We cannot do that. Biogen lacking liquidity. Caterpillar reporting. Yeah. Ally Financial is a bank. Yes, you're right. Thanks for that, Christian. So 429, that is today actually. It was earlier today. So, too late here as well. ETSI, I mean, most of those stocks are going to be a no-go. Let me take a look. That's May 5, Qualcomm. That would be no data available. Okay, so that means that, with this huge jump, that means that earnings were yesterday. So Z for Zillow, earnings on the 4, Beyond Meat. Again, mechanically speaking, I'll go through the list, even though I recognize most of those symbols from yesterday. So probably we won't have a trade for non-directional purposes for a credit. Okay, so then we look at other opportunities. So ABBV, again, earnings very close by on the 30. CVS, that was the week after, I believe. 54. TJX. This one is 520. Here we go. So we have a possibility here. Okay, that stock got 50 over percent probability. Earnings are happening on 520. So that may be an opportunity for us to do this trade. Now, at this moment in time, if you look at the chart, you only see green, you don't see red UFOs. So why is that? Is it because it's making all-time highs? Yes. So if that stock is making or about to make all-time high and you don't have red UFOs overhead, so then that's it. Okay. Unfortunately, for a non-directional trade, we need green and red UFOs. Only green is not enough. So we're gonna look at Twitter earnings on the 29. We're gonna look at Lyft. Okay, we need dates beyond May 7. That's May 4. We got Uber. That would be 5.5, no good. And finally, the last one, Comcast. So we don't have it, my friends, just like yesterday, even though the VIX is a little higher. Unfortunately, most of the symbols that showed up were the same as yesterday. And therefore, we did not get any tradable opportunity at this moment in time for an iron condor. Okay. So again, looking forward to hedge my portfolio. I mean, my portfolio right now is only one trade, but looking forward to hedge the Vega of it, okay? Because that trade is loaded on positive Vega. I wanted to add negative Vega in my account, okay? Could not find it, okay? So I got two choices. Forget about it, meaning that the risk and the reward of this trade is under control, especially the fact that this particular trade cannot lose money. So it's not a big deal if you don't find it. So you can just move on and go find directional trades or things like that. Or let's say that you have to hedge. Let's say instead of one trade like COP, which is positive Vega, let's say you have 2 or 3 in your account. And, if you get directional buying options, that's, again, more positive Vega. So, that would be too much positive Vega. And if the VIX was to drop, it would really hurt the portfolio. So what would you want to do? Well, then one option would be to look and explore options to do neutral credit spreads, okay, and collect premium from one side only, from the put side or the call side, depending if you do bull puts or bear calls, and do that. That would be another option that you could exploit. Now, I'm not a fan of doing that, okay, and it's not that is wrong, but you see me most of the time in the sessions operating with multi-leg strategies such as double diagonals, iron condors, double horizontals or double calendars, which is the same. And the reason why I do that is because that way I got more flexibility to run those tweaks for what to do when the market moves against me. If you do a credit spread, can you do things about it if the market moves against you? Yes, you can certainly work and do some adjustments, but you are so much more limited compared to if you have options above and below price, because then you can keep rolling, and then convert into iron butterfly, for example, as we did with a very much fun Facebook iron condor that we were trading for a few weeks. Or with COP, for example, as well, we've been doing so much to end up with a risk-free trade. You cannot do that when you do credit spreads, or you could do some, but you are much more limited. So I'm not a fan, okay? So in this sense, since the market seems to look for a breakout and start making all-time high again, at least the UFOs and the climate tells us that, and the trade I have in the account being positive Vega is free of risk, because the worst case is to make $43. So given that fact, I'm just gonna go all the way direct into looking for more directional opportunities, and I'll start with longs, which is exactly what I was doing yesterday when I was looking at Ally. Okay, so resorted my list. I got CRWD on the top. It's not going to work because it's below the reference price. So while the climate is blue, it's below the reference price. So, forget about it. Then we got FANG. Okay, so let's take a look at FANG. earnings on May 3, so that is not good. Okay, that is not good because you are not giving yourself time to get to any target because you need to be out of the trade before earnings, and if earnings are May 3, that happens to be next Monday. So if you get into the trade today, you will need to be out tomorrow, unless you want to gamble and expose yourself to the earnings report, which, as I just phrased, it's a pretty big gamble actually, because you may have a 20% gap against you, and now what? Could you have a 20% gap in your favor? Yes, but that's called being lucky. Okay, so I'm just gonna pass and go for the next one. We want to use expiration dates that are a little bit further out, so we give the trade the opportunity to travel towards our target. If not, it's not a very useful beginning. So, for example, USB, US Bank Corporation, with earnings on July 14, as you can see on the bottom part of my screen, that could be a good candidate. The climate tells me 4 out of 7. So if we were to get into this trade, definitely we can experience that initial push in our direction and then let the market do its thing until the move develops more and more. So that's good. When looking at USB, looking at the highest time frame, which is the monthly time frame, we are hitting a monthly UFO, which is of a red color. Those UFOs in that time frame got power of 61%, which is not a joke. So obviously getting long inside one of those UFOs is not something I would see as a very, very, very good idea in the first time I look at it. Okay. Having said that, I will say it is indeed a good idea. Why? Because notice that price is inside the inner flying saucer. What does that mean? That the meat, okay, the very key area within the area where the highest concentration of orders is identified by the app, is the one being hit, and therefore the highest concentration of orders are the ones being filled. And if they get filled, okay, and they bring the prices back down a little bit so we can buy, guess what? The moment price goes back higher, is now going to travel through an area where much less orders are available, and therefore price may go through and starts making all-time high, especially as a contagious effect of what potentially could happen to the S&P. That's what I'm trying to do. Okay, the idea is to not only take advantage of the move, but in this case specifically, I'm thinking all-time high, which is typically a situation where it's not like it's going to go to the moon, but often you have a very strong push at the beginning, and that very strong push will allow us to then add options against the options we got in the first place to offset and end up in a risk-free situation, ready to lock in those profits for until the end of the trade, or experience further push from that stock and profit even more. So I'm looking for that initial strong push. That's what I'm looking for. It's kind of like an event such as all-time high is similar to an employment number report, or an interest rate report, or something like that. It gives the market a boost, and therefore that peak of volatility allows you to either hit an initial target, like a safety target. It helps you to hedge the trade with other options to lock in profits. So that initial push, it's a nice thing to have in your favor, right? And I'm not saying that it's going to happen for sure, because I don't have a crystal ball. But again, everything I have explained, it's definitely giving us an advantage to position ourselves smart in case that happens. Okay, and if it doesn't happen, then we'll talk about the risk management, and of course have that under control. That's a must. Okay. So so that's what we have with USB. Again, when looking at the daily time frame, which is the one that we are looking for the climate, notice that there are no UFOs. Okay, there are no UFOs. Maybe a few days ago there were, okay, but there are no UFOs. I mean, if I go back in time, let's say 9 days ago to the 20, look at that, there were UFOs. Okay, which those UFOs are what you see on the monthly time frame as the flying saucer, the inner circle inside the flying saucer, which represents the greatest concentration of orders. Okay, well, what happened? Price went through these, so all those orders got filled. So that's why I'm not so concerned about what you see on the monthly time frame. Okay. Anyway, so going back to the 55, we are dealing with a collection of UFOs below price. We are dealing with proper climate. 58 is our reference price. 58 is right there. It is indeed coinciding with two UFOs that are overlapping each other, and therefore our entry price for the trade is there. Okay, the top of that UFO, we are expecting, we are wishing for Mr. USB to come down to this price level. Then we're going to get our options trade on, get filled on this options trade to benefit from the potential move to the upside of that stock, that then would start making all times high, assuming I'm right, and the S&P 2, and that could be a major boost for that stock to really, really accelerate in price movement to the upside. Okay, so that's the plan. That's what we're going for. So with all of this said, the top part of that UFO is 58.39. Okay, 58.39, and therefore that's going to be the entry that I'm going to input on the analysis tool. So USB. So U58.39, I believe is what I said. Is it what I said? 58.39. Did I say that? 58.39, correct. This is very strange. How come plus 5% is 56? That makes no sense. That's why I'm getting, this makes no sense. This really makes no sense. One standard deviation above price. Price is 59, should be above 59. Well, okay. I think we just discovered a little bug there in this tool. Not sure what's happening to that stock, but anyway, in any case, looking at the option chain. Okay, looking at the option chain, we have multiple expiration dates. So first of all, the normal thing that you would do when you do a directional trade would be to look at where the target should be. So let's say the target was to be 65, right? So if the target was to be 65, what would you do? Well, you will look at the entry, which is 58. You will look at 65, and you will be like, okay, from 58 to 65, you got $7. Knowing that you got $7 of distance between entry to target, you would for sure want to look for options that allow you at least $7 of price movement based on their implied volatility. And that would tell you that you want to use, in this case, the July expiration, 78 days to go. Okay, that would be based on the distance to the target, which is $7. Now, in this case, we are getting into this trade with the intention of making all-time high and traveling towards that place on the chart, all times high. So we cannot set a target. Okay, so what we're going to do is to experience with the trade and either trail stop, follow price, or again use options against options to lock in profits the moment that stock starts moving in our direction, and then just collect as much as we can. So you will see how we do that, as we talk about trade management, okay? But my point is that we are not going to have a target. So if we don't have a target, how do you know which expiration date to use? Because I cannot come here to the option chain and be like, okay, my target is $7 away. Well, we just said I got no target. I'm just going to see how far it goes. So how do I know which expiration date to use? Well, in this case, and in any case, by the way, you will want to do that. We want to align the expiration date to be used with what earnings will be, which show us July 14. So the date that has earnings, okay, it's in this case July 16. That's the one we're going to use. Which funnily coincides with the one I picked before. It's just a coincidence. Why are we going to pick this date? Well, because if we buy an option using that date, of course, like all options we buy, they will lose value as time passes because of the time decay effect, that time passing produces. So what's the beauty of using that particular date? Well, we know that sometime in the future, it's going to be 78 days from now, but sometime in the future, earnings will take place. And as earnings take place, these particular options that expire on that particular date will gain plenty of value, because many people are going to be doing their earning plays, and there will be plenty of demand for those options, and therefore prices will go up. So this allows me to lose less on time decay, because while I will lose on time decay in the now, sometime in the future, I will have a boost of premium coming back to those options in the form of implied volatility, which will kind of reinstate the theta I have lost or a portion of it. So using any other expression date would not give me that benefit because earnings would not be built in, but this particular expression date would. So that's why I'm going to go for that one. Okay, that's what I'm going to go for that one. Mark, you have to choose an option before the standard deviations can be calculated. Yes, you are right. But earlier, Mark, I had 5%. And when I had 5%, it was also giving me a wrong number. You see, 5%. So last price plus 5%, last is 59, plus 5, it should be above 59, and it's giving me 56. So I guess there is a bug there, which, unless you insert an option strategy, then the calculations are wrong, it's just wrong, which is again a bug. Okay, I guess we found one. So anyway, we're gonna go with finding an option using July expiration, and we're gonna right click to analyze and buy a single option. And in this case, I'm just gonna go with one call. Why? Because if I buy a spread, which is often smarter, then in this case, I would cap my potential for profit. And again, because it's a special case of being an all-time high situation and scenario, I don't want to cap my profit. I want to expose myself to the whole thing. So we're going to go with a simple call, knowing that later we're going to add stuff to it as a trade management action to embellish, if that's a right term to use in trading, to embellish the risk profile of this trade and ideally, hopefully, reduce plenty of the risk and ideally, hopefully, lock in profits no matter what. So we'll deal with this trade later in the future with more actions to make it better. But right now, we don't want to cap it from the beginning, because if that very strong push was to happen, the way I am willing to position myself, so if it happens, I can benefit from it. So then I will not really enjoy it if I was to use a spread. So we're going to keep it super simple, even though it's going to be a pricier trade, because buying a call is the most expensive options trade you can do, right? You just buy an option, that's it. So you would think it's not a good idea, but again, given the setup that we have, it is indeed a good idea. And then we're going to make it better with future actions. Now, we have rules around which options to buy. Okay, we have rules around which options to buy. And one of the rules is that we like to use the entry price for the underlying asset, which in this case is USB stock, which is 58.39. That was the green UFO, and we like to adjust delta to be 30 for that strike. It doesn't need to be 30. It's fine if it's 35, but it needs to be as close as possible to 30. And especially in this case, the option chain showed strike price increments of $2.5 at the time. So we may not be able to have a delta exactly 30. We may not be able to, and it's okay. Okay, we get as close as we can, and that's it. Okay, why? Because again, I mean, we'll talk about it. There are multiple things that we'll need to talk about when it comes to understanding options pricing and optimizing the strikes that we utilize. And I said before a few times that there will be a time in the sessions where I will bring in additional tools and so on. I just want to do it when the time is right. Okay, but you will see why we look for certain parameters of delta and so on, because basically we are trying to maximize, in this case, the gamma impact in case the trade works in our favor, as well as in case the trade works against us. And also by doing that, you reduce the cost of the trade a little bit, which in case the trade works against you would be ideal. So in this case, instead of using the 60 call, we're going to move to one strike higher, 62.5, and that's bringing the delta down to 28.91. Well, that's the nearest we can get to 30. It's a bit too low. 30 or above would be better, but again, if I do the next one, as you saw, it was 40 something. So it's not even 40, it's more than 40. So what's the nearest one? Well, 62.5, I guess you are with me. I would say it's kind of common sense. Plus, even though it's a 0.5 strike, you can still see the ask and the bid to be very reasonable. There is not major slippage at all with that particular strike, even though it's a 0.5. It's a decimal type of strike. So all good for us to use that strike. And by looking at this, if you were to buy that particular call when the stock drops to 58.39, so that call would cost you 105. let's call it 110. So what's the most you can lose? 110. So super simple trade to start with. I gave you lots of detail so you guys can practice this on your own. There were many more symbols on the list, right? If you look at here, many more symbols. So you guys can do a lot of practice and homework. And I wanted to give you all those details so you can basically replicate what I'm doing or what I just explained when you do it by yourself. Okay. But again, this is the simplest trade ever compared to other things we've done with COP, for example, right? So this is piece of cake, right? But simple is powerful and simple works. So that's the approach in this case with that unique situation of a potential all-time high breakout. Okay, so let's place an order, my friends. I don't have much more to add. I'm just gonna do some drawings on the screen so we can, track this trade properly. So style, we're gonna make it dotted, and the data we said the entry is 5839, which is that collection of two UFOs grouped together. We're gonna add USB there so we can review that in our next session. And then I'm gonna bring in TOS. So this is USB. Okay, and we're gonna go ahead and use the July expiration, buying the 62.5 call. So buying a single call, okay, right there, okay, buying a single call. And again, the order, okay, and we are going to add an activation rule, okay, which is going to be if that stock USB goes at or below 58.39, then we want this to be executed. I'm going to make it market price and save. Hopefully I'm not going too fast. You guys are following. So again, buying the 62.5 call that expires in July 16, only if the stock drops to 58.39. So this is the trade that we have. And therefore it's now time to go back to the chart and look for another one. Okay, so we did this plan when the stock was here. So we'll see if we get a fill again in the next session. Going for the next one, we have one. So let's see, 20 out of 9. So the climate tells you we are late to the party if we do. Next one, here we go. We got our ally, okay, is here. So let's go ahead and revisit this particular trade. So this is 6 out of 8. So it is indeed valid. Yesterday, we already saw that that particular stock was about to make all-time high. So we were looking at the July expiration yesterday as well, and you probably remember I ended up using September. But before I get there, 49.43 is our reference point. 49.43 is more or less here, okay, somewhere here. So that falls within that UFO, okay. Therefore, our entry for this trade would be the top of this UFO, which is today 50.07, okay. So 50.07. So if I bring ally to the screen, the order, Mark, the order, all directional orders are all directional trades are day orders, because we have that reference point with the EMA that changes every day. So day order. Okay. And by the way, everyone, if that's okay, in all channels, please go ahead and give me a little feedback at this point. How is it going? How was it with USB? Did you guys follow? Is it all clear? Do you like it? You don't like it? Are you executing it? You're not? Is it simulated? Is it live? Just give me a bit of feedback, guys. Okay. I know I'm a bit demanding today with the feedback, but hey, be generous. Come on. I know you are concentrated, listening carefully, which is why sometimes you don't type. But let's do it, my friends. Thank you so much, Ahmed. Love it, Christian. Thank you so much. Anyway, so we said order submitted for Leland. Thank you for the feedback. Very good. We said 50.07 for this trade. 50.07. I'll make it a dotted line. Here we go. Okay, so that's the entrance. Okay, the entry. So 50.07. Here we go. So notice how yesterday I ended up using September, right? So again, I want to pretend I never did that, okay? And go back to the standard approach I just explained a minute ago, where I was saying earnings are on July 16. So let's use that one, okay? Let's use that one. So let's go back to July 16, okay? And what's the issue with July 16? There is none, okay? There is no July. You got June and you got September. So it's absolutely not ideal to use September, but in this case, you have to, or you pass on the trade. Is that making sense? Then when it comes to selecting strikes, well, 50 will give you 55 delta, which is too much. The 55, which is $5 away, there is no much to choose, okay? That will give you 35, which is the nearest to 30 that we can get, and therefore this would be the trade. So it's copy paste from yesterday with Ally. The only difference is the entry price, the triggering condition for the order to get filled. Thank you for confirming that, Mark. Love it. Would be 50.07. Okay, so again, let's go back to TOS. We're using September 55 call, buy a single option. Let's edit the order one more time. Okay, the order one more time. Make it market. We'll need to talk about order types as well, okay, at some point, specific to TOS. 50.07 is going to be the triggering condition. Save, confirm, and send. Send. Okay, so I know I did this quick, but it was a repeat from before, so I guess you're okay. In any case, let me review. We got Ally, COP, USB. COP is a trade, so we are in. You can see there is a P&L there, okay? So we are in a trade. The other ones got no P&L, which means they are orders. There are no trades. So what do we have with Ally? So with Ally, we have a trade by which we're looking to buy one of the 55 call that expires in September. September 17 is a 55 call, and there is a condition right there where if you click, it says that this condition is to only buy if the stock drops to 50.07 or below. A similar situation with USB, where we are buying, in this case, the 62.5 call with a different condition, which I don't remember by heart, but probably you remember from before. Some of you got the order in, so we are good. So same story with Ally, okay? Now, of course, Ally is much less ideal. If I was to do it for myself in my account, I would pass. I would continue researching to find for an ideal trade. And if I didn't find anything at all and I need this trade in my portfolio, then I would take it. Why is Ally not ideal? Well, because we don't have the expiration date that coincides with earnings. The July expiration date does not exist. So in this sense, you are paying more. And while a longer expiration date got less time decay, okay, you lose a bit less in that. But at the same time, you will not get the boost that earnings provide to an expiration date when earnings are approaching, because September is not lining up with earnings reports for Ally. Okay, so I'm not too happy to take this trade, even though I will take it if I need to and I don't find anything else. Okay, so I'm going to put it here so we can review it as well. Back to the next one, which is HOG. Okay, and by the way, we're going to discontinue now the stream from the public channels and so on. So I will see you next time, my friends. We'll continue in the private room with more trades. Hopefully all is going well everywhere, wherever you are, wherever channel you are in. Thanks for joining me today, guys. We will now be continuing in the private room. You guys take care. Have a good weekend and see you next week if you are in YouTube or Facebook. Take care, my friends. Stay safe. So we're going to be looking at HOG. This one is a trade that it's still okay.